Hey everybody, happy holidays. It's Anthony on Land Title, just bringing you your big update for the month of November, December, November data in December, right? Okay, so we got a lot to talk about here, but the biggest thing I kind of wanted to highlight was where inventory levels are, right? We've been in this big inventory situation for a while, but we're really only up 4% over this time last year. We've really seen inventory levels start to come down, and for two big reasons, right? This time of year, things start to come off the market a little bit if they're not selling, but we're also up 15% under contract numbers, which looks stellar. So sold numbers are up year over year. The one kind of glaring issue that we kind of need to learn how to talk around is that the average sales price is down by 2% right now. So year over year, that doesn't look great. But here's the thing. We've had more sales this year by 8%. Under contract numbers have been up. The active inventory has been up. It's kind of the story of the situation. Now, it's going to be way less extreme in the detached market. So we only have a 1% drop in prices, which could be composition of sales, but some of it definitely is a little bit of slippage on some markets. But this 15% increase in under contracts, but a 14% rise in actual sold inventory. Now, we're down now in inventory from this time last year in detached. So detached, gold standard in real estate in Boulder, right? Everybody wants Boulder single family homes. The attached market is where we've seen a lot of the struggle. We're up 22%, which is actually far better than it has been. And we still saw an increase in under contracts, right? Because cost of money relates to more buyers entering the marketplace. And for 3 straight months now, we've really seen an increase in buyer behavior. So that has been wonderful, but we're down 5.5% in solds for the year to date. So that's been interesting. Now, if we look at our inventory, where it's at, all of that, you can see month over month, we've seen 25% drops in inventory across the market in most cases, just because people are coming off the market, right? And we've definitely put more under contract than new listings had to offer. If you look at it by month supply of inventory, you can see we're at 2.7 months. This is going to feel much more seller favored than it has in a while. So this is easily the most seller favored market since March. Now, that's a big deal. So if you're listing homes, you're prepping sellers to get on the market soon. They definitely want to think about listing early this year because inventory levels are going to be really low. Now, what does that mean for everybody else in the attached market? We've just seen that rise in inventory. There's not as many buyers, but they are starting to show up a little bit. There is a lot higher inventory there. It feels much more balanced. 4 months is NAR says is a balanced market. Here in Boulder County, it probably feels like a buyer favored market for sure in many cases, especially at the higher price points. You can see across some of these submarkets, it's definitely different. Lafayette being kind of the one that feels more like the detached market, right? So if you have townhouses in Lafayette, I bet they feel a little bit more like single family behavior wise. If you look at days in MLS, we could look at this one combined. Really, 51 days, 51 and a half days in MLS is pretty close to the national average. We're still a little bit less than that. Yeah, it might be a lot more than we've seen, over a lot of the years recently, but this is pretty normalized behavior, right? This has really come down, or it's come up a lot, but it also is stagnated through the fourth quarter. And when those numbers start to stall out, it's really because buyer behavior is increasing in the fourth quarter, right? Usually you see this skyrocket all the way through January. So now that it's plateauing a little bit, that's a good sign that the market's in a really healthy place. If we look at them by price range, check this one out this month. The sold numbers by price range, we had 10 sales over 3 million last month. That was a really big month for that. We've seen some really good behavior in that 1.5 to 2 million market. Year to date, we're up 26% there. So that's like the best case scenario as far as that price range is concerned. That's the biggest increase. We're still a little short on some of the other ones, but sales numbers look really good, right? Because that fourth quarter has been way better than expected because as interest rates have come down, we've just seen more activity. And it's been awesome to see. But I guess the real question is, how do you relate this to clients where, what is it going to feel like in the marketplace? So MLS or days in MLS, month supply of inventory, that's what you're looking at here. The days on market are somewhere in the 40s for maybe more of our medium buyer price ranges. You get more into the luxury, you can see that really good inventory that's really well buttoned up, it's priced right, is moving pretty quick. Everything else is sitting, but it's taking some time. There might just not be a buyer in that part of the market for you, right? I mean, I get a lot of questions on that 800 to a million market right now because there's a lot of days on market and there's just not a lot of buyers shopping. And it's partially due to the fourth quarter and it's partially due to the cost of money, but it's starting to get a little bit better. And you can see it's very strange. Under 2 million across the board, month supply of inventory is really like just under 3 everywhere. Now, that's not normally how this looks. Normally it looks like a step ladder where you kind of step up the stairs, right? The higher the price range, the less the buyers, so we have more month supply. We've really seen this kind of reel itself back in, and this is something that don't expect it to stay this way, right? I mean, as buyers come back to market, those lower price ranges are going to get eaten up quickly. You just don't have as much. You're going to have a lot of turnover down there. And, we've seen 8 months of inventory come off the market at 3+ million. So those luxury price points are also coming down quite a bit. So it's getting a little bit more favorable all the time for the sellers there, right? And it's definitely more favorable for the buyers right now in all that under 2 million market than we've seen. Let's take a look a little bit at this one, average sales price. So let's look at it detached and attached separately. This month we showed minus 1.4% year over year, and it's up and down quite a bit. So we've seen a really good November this year, but that number is pretty average, right? Over all these different markets, though, you can see in the last 12 months what markets have done better than others. And the city of Boulder is actually the worst of the bunch. And it's largely due to it's a very expensive marketplace. So when cost of money is high, people don't buy as much in Boulder, or if they do buy it, they're paying cash for a lot of it. They might be making different decisions than they were before. So the composition of sales has changed. Now, here's the big difference. You get to the rest of the markets. Think, Louisville, Lafayette, Superior. They're all way up in average sales price. 8%, 6%, 9%. We've seen some really good numbers out there in those markets. So the detached single family home market, if you're taking a look at this, I would say this is a really positive sign. Things are looking really good. Now you get into the attached market, and that's where we're seeing a lot of that depreciation. Minus 4% year over year for the county as a whole. And last month was a pretty decent month. We saw more go under contract. You see more buyer behavior out there, but you're seeing like the Louisville market having some issues over the last 12 months because that composition of sales has really changed. But the city of Boulder down 3.5%, that probably surprises a lot of people. There's a lot of things, facing the attached market that's challenging, right? HOAs and insurance and all that stuff has been an issue. So we've definitely got some struggles there. If you need a slide to kind of tell people about what's going on in the marketplace, this is always a good one to do that with. You can see the sold units every month and how they kind of plateaued out over the last October, November. This has been an interesting one to watch, right? I mean, we're kind of at that light at the end of the tunnel. The down market is coming to an end, and you can see that as interest rates start to trickle down, buyer behavior is going to increase. All the estimates are showing, 10, 20, 25% increase in sales volume next year. So we should trend a lot like we are in the fourth quarter going into, the beginning of the year next year. Now, if you look at it by the attached market, this is where it had some of those issues. So you can see that. You can share that information if you have sellers in that area. Now, the sold price to list price, they're basically the same either way. So we could look at it this way. Together, 97.9% listed sale price across the entire market last month. It's been very flat. You can definitely get stuff under contract, but keep in mind, it just doesn't take into account our price drops or our concessions. So you're seeing more and more concessions as that number kind of stays flat. Now, it's still 99% between 800 and a million. So there's still strong offers taking place out there. But other than that, it's softening just a hair like you would expect to see in the fourth quarter. So if you need any other information, you have any other data needs, don't hesitate to reach out. I'm Anthony at Land Title, and I hope to catch you on the next video. Bye.